All right.
Well, now what are we going to talk about?
We're we got a few things lined up
Yeah.
for us today as everybody gets in. I know the first question we always talk about, Rob, is kind of where you're at. Would you like to share with everybody where you're at?
I'm in the northwest. I'm out to the west and up to the north. How's that?
Okay. It's so beautiful in fall there.
It
I
it
love
is definitely, autumn, and it's pumpkin spice jokes aside. I really like the autumn because maybe because my mom always liked the autumn, but the autumn is starts to get a little crisp at night, and so people start building fires, and there's jack-o'-lanterns, and there's the holidays are kind of approaching, but there's still warm days, and
that.
the weather's still good in most parts of the nation. So I'll tell you, I think autumn is just a great season. It's dry, it hasn't started to rain yet, kind of thing. So although in some parts of the nation it's raining, but yeah, and I like the colors, autumn colors.
It was my favorite season before I moved to Texas. And now I can't really call it a
Now it's
season.
summer.
Like it's just a week. We do have changing of leaves, but it is really short-lived. But I did make pumpkin bread last weekend, so I'm trying to get into the fall spirit. It's just really hard when it's 90 degrees out.
Very hard.
Yes. But I feel like fall,
It's
like
it's
football and pumpkin bread, like those things all like go together. It's just I have to stay inside and pretend that it's getting cooler outside.
Yeah, but every season is pretty cool, and it's certainly much more fun to talk about the seasons than it is to talk about interest rates.
That is very, very true.
Boom, boom. He brings the mood down with one sentence.
Yeah. And you
Both
flip
are
it
very
back into something
unpredictable.
mortgage relevant. I love it.
Yes.
All right, well, I'll go ahead and get us started. Thank you, everybody, for joining. I'm Melissa Langdale, the President and COO of the Mortgage Collaborative. I'm joined, as always, by Rob Chrisman, the brilliant Rob Chrisman, and we are joined today by the very brilliant Tammie Gravlee, who is the Senior Vice President of Mortgage Operations for First Bank in Tennessee. Tammie, thank you for joining us.
No, thank you for having me. It's an honor to be with the traveling. We never know where he's going to show up, Rob Chrisman.
Sometime I'm going to be in jail from some nefarious activity on a Thursday night, and
let's hope not.
Won't that be interesting?
I don't know that they'll let you do a podcast or webinar from prison. So let's hope that doesn't happen.
Yeah. I've received calls from jails and prisons before. So Melissa, if you get a call on your cell phone and it says like, something odd, Jackson County, just pick it up.
Just
pick it up. It'll be me asking for bail.
That's fantastic. I actually, I have some funny stories around that. We won't talk about it today. All right, I'll go ahead and get us going. For everybody that's joined us, make sure that you subscribe to our YouTube channel and TMC Connect's podcast channel. We'd love to see you guys there. In case you missed an episode, you can always catch it through YouTube or podcast. All right, well, we'll go ahead and kick us off. Obviously, as Rob mentioned, rates are kind of keep trickling up there. Tammie, are you seeing your loan officers starting to ask for ARMs now? Are they starting to kind of ask for new products to help with kind of our challenges with interest rates today?
Well, actually, they started asking for ARMs a long time ago. When we went from 2.5 to 4, they panicked at that point. So, we definitely have some percentage of our portfolio that is ARMs. However, the pipeline probably only carries 2 to 3% right now, and the majority of that is probably from a jumbo perspective. which might be, mixed with portfolio product as well as secondary product. We're hearing a lot of different requests. Some that, you've heard of, and some of you're like, wow, I've been doing this for a long time and I haven't heard of that product. I would say that probably the biggest request has been around, rehab. That hasn't been a big product. It's always there, but it just hasn't been at the forefront over the last few years. So rehab's a big one. All those specialty type products, because everybody's fighting for that deal, DSCR, just the specialty stuff, because nobody can really seem to fit into the conventional type lending product that we've seen. We're having a lot of requests about how can I make my loan assumable. I have, you guys may have heard of this, and I'm sure Rob has, so maybe I need to call Rob and let him give me some schooling around this. Porting of your mortgage. I had not heard of that. I don't believe I have anyway. It's been a long time if I have, and I've forgotten, where, people are trying to pick up their current product and their rate and move it to their new house. So there's been a lot of off the wall requests, some that work. You can sit down and try to put the product together, or get out there and try to find an investor, or talk with the GSEs and try to figure out, hey, how do we come up with something different? Unfortunately, we're in a vanilla market. There's not a lot you can do, because even if you get a different product, the rate still kind of remains the same, because even if it's a portfolio product, you're not going to get it much less than what you're seeing on the street every day. So I think everybody's just grasping, and ARMS, yes, is one of them, but I think there's just an array of things people are just reaching for and grasping for.
Yeah.
The song remains the same. So Tammie, so the portable mortgage, which I attribute to urban myth to some extent, as you know, government loans are assumable,
right?
With permission from the servicer, I believe. When there was a rumor, I don't know, a month or two or three ago, about a portable mortgage, and I received several emails from people saying, hey, my loan officers say there's a portable mortgage out there. Can you find out who's doing that, or how it works, and who do we see about it, kind of thing. And it turns out that I couldn't find it anywhere. And when you talk to people who are really, really good, and maybe someone will chime in the chat, and I can't quite see the computer screen that well. The fact of the matter is, if you are an investor, I'll put on my capital markets hat here briefly, but if I owned a pool, let's say I own your 3% loan. Yeah, Melissa gets the 3% loan, and I'm the servicer, and I have that asset, and I bought it at par, a couple of years ago. Okay, so follow along here. So then Melissa calls me up, and now we're in a 7.5 or an 8% environment. And Melissa calls me up, and Melissa says, hey, Rob, would you, we're thinking about moving to Austin because my daughters are there. Actually, I'm getting you two mixed up a little bit, but you get the picture. And I'm servicing, and I have that asset, and I have a $300,000 loan that's paying 3%. And Melissa, you're making your payments, and everything's great. Well, as a security owner, I'm thinking, all right, wait a minute. I don't, do I want her to pay off, or do I want to just keep her in place? Because if she pays off, yeah, I can get the money back, the 300,000, and I can make a new loan with that. Or if Melissa calls up and says, hey, can I just move my mortgage from here to there? And I'm thinking, wait a minute, if Melissa pays me off, I can take that $300,000 and now earn 8% at par, or 7.5%. Right now I'm only earning 3%. Well, I don't want Melissa to be able to transport that mortgage. I want her to pay it off so I can get the $300,000 and go earn 8%. So this portable mortgage isn't it's not in the best interest of the owner of the security, especially if Melissa's making her payments and so on. There might be some credit unions and banks that have some kind of portability, but really, if I'm an investor, I would rather earn 8% than Melissa's paltry 3%. So I'm not going to let her pick up her mortgage and move somewhere else. I want my money back to go out and earn 7.5 or 8. That's the basic scenario. But
Agreed.
We do have a
so,
couple of people chatting in. Steve Turner says that porting is obviously a European thing. And Terry Evans says the same thing. They did a research. They did some research a couple of years back, and Canada does porting, but not at the US, not in the US.
yeah, it's too, and people, it's interesting. I mean, it's not to say that it won't exist at some point, but as I said, if I'm an investor, I'd rather earn 7.5% than 3%. So go ahead and pay it off and go get a new mortgage, Melissa. But it is interesting when you look at some of the mortgage programs that are going on in places like Denmark and Australia and Europe. There are some interesting concepts out there, but if you look at the size of the US mortgage market, it's so much more immense than Europe or Australia or Denmark or, Iceland. Oh, Rob, I hear they have this mortgage in Iceland, yada, yada, yada. And I'm thinking, yeah, they've got, 8 houses. So, it's a little different there than, $1 trillion a year that we're seeing in the United States. Anyway, all right, I'll get off my Go USA bandwagon here.
You should always have that Go USA bandwagon. We'll let you.
Yes, I know.
Tammie, you started to talk about kind of different products and those sort of things that your sales team was asking for. Just over the last week or so, I remember reading an article about just kind of really in the second quarter of this year, banks are starting to gain market share. And so I'm curious, do you feel like it's kind of product mix that's driving that? Do you feel like, or are there other, kind of things that are contributing?
Well, there's probably a lot of things that are contributing, but I would say, and I'll speak from just First Bank's perspective, and maybe some of the surrounding banks that we're very familiar with. I think that if you're a mortgaged or a bank-owned mortgage company or division, the bank is probably making a bigger effort in today's world to try to partner with you to help increase that production. So what we've done is partnered a good bit with our bank to try to create some of those products that they're in the secondary. So it's not like they're necessarily not in the secondary, but sometimes they're a little more difficult to do in the secondary. So your DPAs, with some of your Better Home products with Fannie and Freddie, the 100% financing, which also benefits, because let's be honest, there's got to be a value there for the bank. And right now, there's not a lot of room on a balance sheet for most banks to be able to do that. So the value to them is sometimes it's a CRA driven product, so that they can actually assist the need that the bank has, as well as, beef up some of the mortgage production a little bit. So we have done a lot of that. I can't say that ours has contributed to construction. I know that I've heard some people say, yes, we're doing much more in the construction arena. Most banks have a conservative view, and construction is very hard to sell these days to the bank. So there's got to be a really good takeout. And, when you're just moving it from one balance sheet to the other, that doesn't make a whole lot of sense. So we haven't seen a huge increase in our construction product. Now, we do a lot of permanent from construction, and we have a large percentage of our pipeline that is driven by construction, because we have some pretty good originators who literally that's all they do. That's all they've ever done, is their partnership is with the builders in the particular markets that they're located. So I think that probably the banks are picking up some of that market share simply because they're getting a little more aggressive to try to help the mortgage companies survive. Because if you're serious and you're bought into mortgage, you need to do what you can to partner to help that division today. Although the bank is probably also has its own struggles, that partnership becomes more important in an economic environment like this. And so fortunately, our bank is very good at that. And we have created some partnerships with referrals Now, for all the compliance people on the call, don't freak out. You can do it. You have to be, you have to be very methodical about how you do it so that you do it correctly. You have to be able to monitor it and report on it and all those good things. You have to be fair about it, because it could also be a fair lending issue. So having a really good, tight referral program, which we've worked on. Our regional sales manager here has been very instrumental in doing that for us, working with the bank. And we're just sitting in a room trying to go, okay, what can we do? I've been in this business, I hate to even tell you, over 30 years. And there are times that I find myself in a room trying to think, how are we going to make it to the next stage? Every time I sit in the room, though, it's for a different reason, and in this particular environment and in this cycle of our downstream for mortgage, it's a different reason we're sitting in the room, because there's a lot of factors that we have no control over. So it just, it takes a lot of good minds. I would say, at times we would get probably frustrated because the loan officers are doing everything they can to bring something new to you, and that can be frustrating, to a product group, to an investor group, to your capital markets group. But you've got to be willing to listen to what they have, because there are no bad ideas. It's just, can you make them work? And so we've had a lot of people just offering up things, going, hey, would this work? Would this work? And some do and some don't. So I think it's just, being very deliberate on how you're trying to put something together, and make sure that when you're trying to sell it to the bank, we've definitely tried to show the value. It not only has a value for us on our balance sheet, but it has a value for the bank's balance sheet.
So do you find yourself competing against independent mortgage banks in terms of jumbo product? And I know independent mortgage banks have been dealt, it seems like, blow after blow after blow with regard to jumbo investors and the pool shrinking. And now it's kind of down to, anytime I make a list, I leave somebody off. But, Redwood Trust is often mentioned, Chase, New Res, in terms of jumbo investors. Do you have an advantage, or are you saying the bank would rather not just have a portfolio of jumbo residential loans on their books right now?
I think we all know the answer to that one. They would prefer not to, but the bigger the loan, the harder the fall. And those are always,
I guess, considered
the fall. The fall. There you go. You're so good at that.
Surrounded in leaves.
I will say, though, I think there's advantages and disadvantages at the bank level for a jumbo product. We do have a jumbo product that we created way before we got into the rate environment that we're in today. It's an ARM, of course. So I think from a fixed perspective, the independents are going to have a whole lot better possibility of stroking some of that business as opposed to what we would. But we have the same options that the independents do in the investor world, the Redwoods. And there's not, and if there is anyone that's on the call, please shoot me an email or a text or something and let me know. There's not a great jumbo product out there as far as I'm aware of. I mean, there's good ones, don't get me wrong, but there's just not one where you can really, grab a hold of the coattail and ride it. So we probably do have an advantage in the fact that we are also being here in Nashville, which most people probably know. If you haven't seen it, you haven't been looking at social media. We partner with Vanderbilt for a lot of different reasons. And in that partnership, we do create, some product that is very available to the jumbo market from a doctor perspective, physicians, but we also try to gear that as well to the first responders and things of that nature. So our jumbo product probably hits our portfolio now more than any place else, because it's kind of the best place to go with it, even though it's an ARM.
Yeah. So Melissa, if you don't mind me changing gears ever so slightly. So Tammie, you mentioned, you used the term economic climate, the yada, 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 the economic climate that we're in now. Let's go forward a couple of years or 5 years or something. What economic climate, how would you describe the economic climate that we're in? And especially perhaps as it pertains to Tennessee, because Tennessee is almost a role model in terms of, you know, ample land, builder, optimism, no state tax. It's growing. I mean, downtown Nashville looks like Manhattan now. I mean, it's crazy. So you've seen so much growth. What would you do? What terms would you use to describe the economic climate right now? Maybe not only in Tennessee, but nationwide.
Wow. You're really stretching me here, Rob. So your
Sorry.
question
Okay. Well,
is, how do
moving
I
on.
describe it?
I was kidding.
How do I describe it now? What I would be 3 to 5 years from now? When I figure that out, I'm going to shoot you a text and let you know where my private island is at, and I'll be more than happy to host you one weekend.
There you go. Well, you know, it's the ability, Melissa's heard this dozens of times. I mean, I just think people who sit there and predict interest rates or predict what they're going to have for lunch on Monday are all wrong.
Right.
Or half the time they're wrong, and then people don't remember that they were wrong, but they talked a good game back when they were making the prediction. And so right now, we are in. I mean, people have been predicting recession, recession for so long, and I think a lot of companies kind of were thinking, oh my gosh, we're going to have a recession, so we better start cutting back our workforce. And I'm not talking mortgage banking, I'm talking general economy.
Right.
And now there's no recession. We've had an inverted yield curve for I don't know how long, and that hasn't foretold a recession. And here we are in autumn. And you like the special effects there?
I like
I'm bringing Lucasfilm here. We haven't had a recession, so now they're like having to go back and like go hire people because the demand is there in certain segments of our economy, and hence the number this morning, the non-farm payroll number that was twice as much as what all the experts were thinking it was going to be. And so the job market continues to be very, very strong. And it's hard to have a recession when you have a strong job market like this. In terms of property values continue to do whatever property values are doing, depending on the part of the nation. But, Allie and others will tell you that there's a lot of millennials and a lot of younger people in their 20s and 30s who still want to buy homes, and the homes aren't there. So, I mean, the economy is doing, I think, pretty well. And the Federal Reserve hasn't, they've been raising rates. It has been raising rates for a long time now, for quite a while, and really hasn't had as much of an impact as one might think on the economy, because so many people have 3%, 30-year fixed rate loans. They're sitting in pretty good shape, and credit card debt is pretty high, 25 or 30%. But in terms of the economy, it's not, it's still going pretty good. So we have high interest rates. The economy is doing okay. That may not last forever, of course, but it's a very tough environment, very, very difficult to be a lender right now, especially for, and I'll be frank, a small independent mortgage bank or a mid-sized independent mortgage bank. And I've made this point that they've been, selling servicing for the last year or two, and maybe they don't have any servicing left. And, it's just a very, very tough environment to survive in. And the banks and credit unions, because of some of the products they can offer, or their balance sheet, or their financial wherewithal, and they're going to be around 6 months or a year from now. They're not doing quite as badly, but the loan officers themselves, it's grim out there. As I've made my travels around the U.S., it's not great. It'll be interesting in Philadelphia at the annual MBA, what the mood is like, really. So, all right, I'll take a breath.
I know. I'll pull on that a little bit. I saw something just recently of somebody, predicting today or reporting that I guess today we have about 180,000 loan officers across the country, and there's a prediction that it'll go down to like 80,000 over the next 12 months or so. And so, I mean, you're spot on. I mean, it's hard to keep going on a 100% commission, right? When the volume isn't there. You know, you mentioned
somebody gave me some interesting similar statistics with regard to realtors or real estate agents, I should say. And, you know, at one point, a couple months ago, I think there was one listing for every 3 real estate agents, and the numbers just don't make sense. And so I think for many of those people, it was kind of a part-time gig anyway, but I think real estate agents have been seeing a decline in their numbers as well. So it's just, you know, it's supply and demand. It's tough out there.
That's right. There's no inventory in a lot of places, for the same reasons that you mentioned earlier, right? Everybody's
Absolutely.
in sub or 3% interest rates, and it's really hard to consider moving to a 7% interest rate. You can't afford the same house that you currently live in.
Right. So Tammie, you're I view you as an upbeat, smiling kind of person, optimistic, cheerful, kind, obedient, thrifty. No, I'm going down the wrong path there with that one.
You really messed up at the last one there. There's nothing thrifty.
But what are you finding some of your time now being dedicated, or has it been this year, to pumping up the troops, to being a cheerleader kind of thing, to a kind of role, encouraging? And if so, what are you telling originators or employees who are kind of looking at this thinking, oh my gosh, what have I gotten myself into?
So yes, probably the majority of this year has been focused on just trying to keep the troops together. I mean, we're no different than anybody else. So we've experienced the ugly layoffs and, the reorgs and everything. And those are hurtful. When you spend a lot of time building a team, you do, I know it's an old cliche, you do become a family though, because we spend more time and energy with our work family, as we call it, than we do our spouse and our children sometimes. Or I do. Maybe everybody else doesn't. I don't do work-life balance really well. So I've been a psychologist, which I've always said, in order to be in the mortgage business, you had to be an attorney, you had to be a doctor, a psychologist, there's all of those things. Certainly, I don't have a certificate to say that, but what I would tell you that I don't know that we've done it well, but what we tried to do and what I try to do is communicate. If you leave people out on an island, and it's easy to do with everybody remote these days, if you don't tell them what the story is and the whys behind what you're doing, they create their own narrative. And typically when someone's creating their own narrative, it's going to go to a negative sense when it's in an environment like this. So communicate. Focus on the fact that you have some people who have said, hey, I really would like to be an underwriter one day, and it's one of your star processors. Work on it, but put them in education today. I know that we don't have a whole lot of money for education and for marketing, but what I would say is show them their value. I'm probably playing off of a conversation we had a little earlier, so I hope I'm not taking one of your questions, Melissa, if so you can just do this or whatever. As the president last year of National Mortgage Bankers, I thought, what's the best way for me to approach going into this year, and what's my platform? Because I don't want it to be a cliche. I want it to be real. I want everybody to really engage. And the platform that I went in with is we have to show a value. And so that was really my platform all year. People are going to come to the luncheon, they're going to come to the events as long as it's valuable to them. Let's be honest, we're all humans. I need to know what's in it for me. I don't mind helping you, but in order to give it my all, I've got to know what's in it for me. So our loan officers, I think, are struggling to do that. They're trying to figure out a way, because for the last 4 years, they've been able to, not that they necessarily wanted to, but they've been able to be order takers. One, you couldn't get out for a while. And then after you could get out a little bit, you really couldn't because there was no time. People were just still taking orders all day long. And we lost the sense of what our value is to the real estate industry. So today, loan officers are working with social media. They're doing everything they can to put themselves out there and show what their value is to that builder, to that real estate agent, to the consumer. I don't do video well. I'll probably, if this is recorded, go back and look at it and go, oh my God, I can't believe I sound like that. Yes, I am definitely from the South, but I would say, and I'm not being paid to do this, but there are companies out there. If your team doesn't feel comfortable doing that, force them to do it. Find someone you can partner with that will help them do that. Social coach is awesome. And no, I didn't get paid for that one, but Joe, I'll catch up with you later if you're on this call. You've got to find a different way to do it differently. We cannot continue to do the same thing that we've always done and expect a different result. That's an old cliche as well. But if you show your value and it's not a job for you and it's really a career, and I've always said, we do have to have those people that it's just a job for, because it takes those people to make things work also. But if it's a career for you, you will be here when all the chips fall. You'll learn how to adapt to whatever area you're in fall. And you will survive. We will come through this and hopefully learn a lot from it, when we get through to the other side. But showing the value, I think, is where we really have to focus. There is value in a good originator. There's value in a good real estate agent. There's value in a good title company relationship. There's value in, the social media partner. We just have to learn how to create that value for each other and then deliver it, in the market.
I love it.
Yeah, I know a very, very good loan officer in the Reno area. And this person has been in the business for many, many, many years and old school. And she does I get together every once in a while, not often enough, but every once in a while we talk business and so forth. And even somebody like that, who's really good at their trade, who's seen it all, even they in this environment are having issues because of the interest rate climate, and they have hundreds or dozens, scores of satisfied borrowers, but those borrowers aren't going anywhere, and with the no inventory. And so this originator, who's very common sense and very practical and very, look, here's the deal kind of person, she's even having trouble. And so, in this environment, it's very tough. And so to just be a new originator has got to be doubly difficult. It's just a matter of, it can be a real grind. And you mentioned using video, and yeah, you're definitely from the South. That's not without its charm. I've undergone hundreds of hours of video coaching, and what I come up with are special effects, autumn, fall. That's the only thing that's the only thing they could do for me, is more special effects. Anyway, sorry, I'm getting excited here. I'm sitting on a pile of leaves, by the way. It's really cool. It's really cool.
I'm very jealous. I'm very, very jealous. We don't have leaves that are turning colors yet in Texas, like we talked about before. So, and Tammie, there's nothing wrong with being from the South. It's lovely.
I don't hear my accent, but I have a lot of people who remind me of it frequently.
I was just at a bank event, and I spoke at this conference, and you're not going to sit there. I'm not going to be like Tammie. I can't be a cheerleader. I'm dealing with a bunch of very pragmatic originators who know where interest rates are, who are looking at their pipelines, who know what the margins are, and so forth and so on. And what the message that the bank is giving them is, all right, you know what, this is a job. It's not some kind of glamorous job. It's a job. And now is the time to learn the bank systems, to learn the CRM, to learn the LOS, to learn what kind of programs we have. You know, they had a speaker come in, they have a tribal lending program. And so they are telling their originators, look, you know, things are slow right now. At some point they'll pick up, but now is when you should be really honing your craft here and learning what we have to offer as a bank, because you don't want to ever turn away a borrower in this kind of environment. And you want to use all the technology that we have to help your borrowers. So now's the time to learn about it while you have the time. So that's the approach they're taking.
Yeah, and that's a lot of what we're doing too, Rob, is with the referrals. And I think even actually it was at TMC, and I don't remember who said it. I brought it back. I haven't really done a lot with it yet, but I have started a little bit on, you know, incentives to your mortgage customers to open up a checking account. We have some of our portfolio products tied to that. And so, you know, I think, again, it's just trying to open up the pantry and dig back there and figure out, okay, what have we not used in a while because we didn't need it? Can we bring it out and dust it off and make it look a little nicer and use it in this time? And I think we're all having to do that. Again, for the compliance people, I promise you, that's all compliant. You can do it. It's not always easy, but you can do it.
Well, we are right up on time. But I wanted to say, Tammie, thank you so much for joining us today. I really appreciate your insights. You know, you're sharing all of your expertise with us. Rob, thanks as always for sharing. At least
I'll show you. I need
weather.
Paul, I need to show you what's above me here.
Okay. Ah, it's so pretty.
Oh, wow.
I'm so jealous.
Yeah. Very pretty. Very pretty.
So jealous. All right.
It's beautiful. Thank you, Melissa, for allowing me to come on.
Thanks, everybody, for joining us. Happy Friday, and we'll see you guys again next week. Thank you so much, Tammie.
Thank you.
Thanks, Tammie.
Bye-bye. Have a great weekend.
Bye.
You too.